Hi, welcome to the Market Alert for Tuesday, the 12th of July 2022. So labour market reality checks and stocks and bonds tumbling later on in the session yesterday. The short squeeze appears to have run its course, so back to the downside. The overnight market showing that too. US stocks were pressured amid China's COVID woes and European gas supply concerns. And one bank warns to brace for huge CPI surge, but it's all downhill from there. So this is about tomorrow, which you can see here. We've got CPI numbers out tomorrow. They're forecasting this huge surge to be about 1.26. Let me just see if I can get this to work. There seems to be a problem with the site, so we'll move on. But the figures for the CPI out tomorrow. So obviously the site should be back up by then, but it's not working at the moment. Gold-silver ratio. I know it's not the internet because I've just reloaded this page, so there's something wrong with Forex Factory. Gold-silver ratio still up at the 90 level. I expect this to increase as well. And finally, if I just move this down, we've seen that the pound falls to two-year low as political uncertainty adds to gloomy economy. We'll look at that in more detail in just a second, but we'll start off by looking at yesterday's Dow, which managed to move to the upside initially, but then closed just above the 5-bar moving average. But overnight you can see prices already on the skid, so the market going through the 38% we marked up yesterday, now heading for the 50, and that's 62 at 30,793. Make it 30,800, and you'll remember that area there could be a potential support area for the Dow. The 30-minute chart taking out the low overnight due to uncertainty and starting to look a bit weakish there as well. Downside in the 30-minute chart, you've got the S2 and also you'll have the S3 as well. Remember that when the market gets to the S3, 90% of the time the market will stay in this area. And for a quick calculation, where we're currently trading from there down towards the S3 is 300 points, so not that far to the downside for the Dow there. So if it goes through, it will continue to drive through. But at the moment, you can see prices are sideways. And don't be surprised if we have an attempt to come back to the low, which we saw a lot of during yesterday's session here. You can see Friday's low. The market went through it, but by the gosh, they were determined to bring it back above that low yesterday, and they did. They brought it up to the DP before it became overbought, and then the market deteriorated thereafter. But again, you can see how important that low is as they try to bring it back, along with the S1 level there as well. In the German DAX, again, similar picture through the 38% in the daily chart, but also trading below the 5-bar moving average now as well. Watch all of the other fib levels there. You've got all the targets to the downside should the market continue down. In the 30-minute chart, again, we've come through the low and the 200 MA, and it's posed a bit of a resistance area here and sent the market lower. So any move back up towards the low, watch out for this level. Yesterday, the market came down to the low, as we see here. And when we got to that low, we were oversold. We got a huge volume, crossover and divergence, and the market trading up to the DP. When we got to the DP, we moved down, we moved back up, and then we came back down from being overbought, oversold once more at the S1 level, and then back retracement, demand, and the market moving up to 78%, just below the DP, where we became overbought, and then the market moving lower thereafter. In the DAX 5-minute chart for yesterday, you can see the market moving and then shaking out here as we saw the cash market open in Germany down and then all the way back up, down towards the low. We're seeing inside of the detail of the 30-minute chart, market up, retracement, up, retracement, and then making its way back to the upside and then staying above the 20-bar moving average. until we get to this point where we get the retracement with divergence there. Let me just drag the chart over. So we've got a retracement, pull back, market trying to pull back with the stochastics as well, but failing, and then moving down. And you can see there we started to head to the downside where we've seen support at the S1, and then overnight prices slammed through the low. The low has then become a resistance level, so any rally back, watch this area, because it was a resistance area over here as well. Got to get through the 50 EMA as well in the 5-minute chart. And also of course the BRN there, where it's also become a resistance area. It took a moment or two to break, but there you can see we've been attempting to try and move to the upside. In the S&P, also moving down through the 38%. They're all consistent at the moment. We've got 62%. We've got the 20 bar moving average with the S&P, unlike the Dow and the DAX. And in the 30 minutes of this, again, we're straight through that low, huge drive down there, sitting at the S1 in a sideways move at the moment. But again, watch any rally to these two levels, 20 bar moving average and low in the 30-minute chart, as it may be a resistance area. And again, the FTSE showing more strength than the rest at the moment as well, as you can see there, holding at the moment, stuck in a sideways range. I'm surprised by this, given the fact that Johnson's resigned. You'd have expected this to have fallen out of bed. It just goes to show obviously it was priced in or baked in. And in the 30-minute chart, also you can see they're coming down towards the S2, huge volume as the cash markets kicked in. We've got divergence there. We get a bit of a retracement back from here, up, back, and then moving up to the high of Friday that became a resistance area, and then the market moving and trading sideways. We'll need to get above the DP and the close and the 50 EMA and the 20 bar moving average, so a lot to get through in this area for the FTSE. If it breaks through this, then you've got the high and this resistance here overnight as well that was put in where we saw the selling coming into the market. Meanwhile, the US dollar is becoming strong, and we've seen pressure in the yen yesterday. The 20 bar moving average, also the 89 and 78% retracement on the fibs. At the moment, trading below the 50 EMA and the 5 MA in the daily chart. So we'll just add in some downside targets. Again, 38%, same as the Dow, the DAX, the S&P at the moment for the yen. So all following a similar pattern there. The 30-minute chart was oversold. Market pulled back and then moved higher, ran out of steam as the market did its retracement. It was also overbought, and then as we got to the high of Friday, the market then trading lower. And again, overnight, I don't know what's actually happened overnight, but obviously some news there. The market being forced down, a lot of volume as well, sold with the retracement and trying to get back above yesterday's low. If it does this, you've got the 20 MA, you've also got the 50 MA and yesterday's close to drive through as well, so a lot to get through. As we saw in the news, the pound making a new low. We went through all of the fibs that we drew in yesterday, so let's remove these. We're going to move into a bigger time frame so that we can see what's going on. But weakness overnight because of the US dollar strength. 30-minute chart there, you'll see, does it coincide with Bailey speaking? No, but it certainly accelerated when he did. Don't know what he said yesterday, but obviously spoke of continuing problems in the economy, etc., etc., and no doubt wanting to raise rates. We're at the low of yesterday as well, so an important level at the moment. If the market fails to hold here, and at the moment we've got the 200 above the 50, the 20 below the 50, and the 5 below the 20, so all in order with the fibs as well in the 30 minutes. So let's have a look at the monthly chart, see what we've got. So 117 level and the 114 level as well to keep an eye on there for the pound. So the pound fairly shortish because of the news and also because of the US dollar, which we'll look at now. So let's go straight to the dollar as we come from the currencies. And you can see there it's marching to the upside and has currently left behind a new multi-year high at 108. This is because CPI numbers are out tomorrow, the prospect of those being bigger than forecast. And of course, that means that they're going to have to go up by another 0.75%. That's going to impact on the dollar. The dollar's going to continue to move to the upside, which means that the metals like silver are going to continue low, which I've mentioned. $14 is going to be the downside sort of area for this. It doesn't matter if anybody wants to sell or not, but that's where we're looking at 89 and also the 78. We've broken the 200 in the monthly chart now, and also the 62, so this is the next downside areas. It's going to be an absolute bargain, isn't it? Let's face it, by the time we get down to those levels, it'll be the cheapest thing on the planet, and 80% cheaper than it was in 1979 and 2011, and also rampant inflation. Unless, of course, they continue to crush the price to the downside, but that's where we are in the monthly chart. Daily, you can see, has already tested the low of last week. In the 30-minute chart, they sprung the market to the downside to the S2, and they've brought it back, but it's hit problems at the DP and the 50 EMA, and now we're moving down. Like I say, wait for the price to continue to move to the downside. It's going to be crushed, and again, you can see that happening yesterday as well. And the same with gold. They want this down. They don't want anybody buying gold. They want to make it look like it's a completely worthless metal. And of course, once you've got control of the market with paper contracts, you can do whatever you want. But that, of course, doesn't stop the fact that there are still premiums on all of the physical products. So it doesn't reflect the reality of what people are actually doing. Again, overnight activity. I don't know what's happened here, but we can see that we've got support there at the S1 at the moment as we become oversold in the gold market. And Brent down overnight as well, up yesterday, but remaining above that $100 level that is very important for this market at the moment to maintain. Okay, so no economic news today apart from Bailey speaking at 6 p.m. Medium impact news item. Tomorrow the market waits or will want to know what the CPI numbers are, and it could be an interesting day as the market either tries to factor this in ahead by tanking the markets or any other opinion they may have. So let's wait and see what happens, but certainly some weakness on the overnight markets. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.